Hey, Stephanie. Figured we'd take a few minutes here today. Thanks for joining me because you are the lead accountant at Crothers Tax and Financial Solutions. And I know the questions we get a lot from our clients, particularly new clients, are really like, how do you do this? Am I going to jail? What's the process look like? And I know it's a little bit different for a business owner than it is for a high income W-2, but why don't you walk us through really what you see as making us different than a normal CPA office and things like that?
Yeah, so normally what you see in a CPA office is you meet with them in January, they file your returns in April or October if you
Yeah,
extend.
I
They
was going
tell
to
you
go
the road,
April.
and then at
If you're a
the next
business
year,
owner,
yeah.
April. I know
Yeah,
April.
but what we like to do with our clients in our office is more proactive planning. So we meet with you at least, depending on if you're W-2 or business owner, just the frequency, but probably around 4 times a year, quarterly, where we proactively work on your plan, adjust it accordingly. And the big thing is we strategize with you guys so we can, by December 31st, kind of know where your tax liability is, add in some strategies, but also implement it. So we walk your hand through the whole process of not only telling you what you owe, but how can we strategize to lower your taxes and help just add some strategy in throughout the year.
Yeah, and I think what a lot of people misunderstand and really don't get about the process, and it's probably why they seek us out in the first place, is the average tax model, whether you're working with a CPA or an EA, a licensed professional, both have equal weight, but the EA enrolled agent licensing is much more tax intensive as opposed to the CPA licensing, which is a lot more around public accounting, audited reports, shareholder reports, things that a public company, that's literally the P in CPA, certified public accountant. And I think what I see a lot of, Stephanie, and I know you do too, is the misconception that the CPA is automatically looking for savings. And the reality and the analogy that I think we both used is it's more of a scorekeeper model, right? We're going to meet, we're going to talk about what happened last year, and we're going to do like some financial dry cleaning, if you will. We're going to press everything and organize it, make it look good. But at the end of the day, we're not going to really affect the outcome. And our model is different because we really dive into the code. We spend a lot of time. How many hours do you think you spend a week just researching new ideas? I know my number, but I'd like to hear what yours is.
Well, I mean, just on the average, I think the IRS sends out new rulings every day. I'm getting emails every day that there's something that's changed or an update here or a site down here. So I'm
Yeah,
constantly on the daily reading all the updates going on there. But I would say about once or twice a week, we're constantly getting updates of like new strategies that are available, new rules that potentially might be coming out. So on average, like at least once a week for an hour, I'm reading up on, hey, what's potentially changing, what's new, what's out there for
that's
you
it.
guys.
Stephanie, those are rookie numbers. You got to pump those numbers up.
I know.
For me, Steph, just so you know, like mine's closer to 7 hours a week. We have multiple peer meetings that we have with other professionals, like-minded former IRS revenue agents, individuals like us, former Big Four partners who really didn't love that model because it's a very top-down model, and they really don't like to rock the boat, even though the code really allows it. So, yeah, and it's a lot of work because for any strategy that we represent to a client and put our name behind and our license is on the line, we have to make sure that it's rooted in the code and it is going to withstand an audit. And then if there are certain things that the IRS is going to look for, we want to address those right up front and make sure our clients are fully compliant with that. Does that kind of like, do you have anything to add to that or anything else that you see there?
Nope. I would like to amend my number. I do spend more than an hour a week.
Thank you. All right, that's good. I was going to write it up in your report.
No, but I agree. Same thing where just making sure, again, as the tax manager in the office and I'm signing off on all these returns, just making sure that we're up to date and compliant with everything, that every strategy, we have legal backing behind it. We can bring it back to the code and trace it back to the code. So,
Yeah, and it's different. I mean, perhaps you want to dive into how it's different for a business owner than it is if you're W-2, because the strategies are limited on W-2. But the point is there's several that exist even if you're a high income W-2 or getting a ton of RSUs, or perhaps we see a lot of surgeons and highly paid medical professionals, but they don't necessarily own the practice. So walk through again, like when someone gets started with us, what does that look like? What are we doing for them? Give me your take on that. And I'll judge you silently. I'll sit here. Or maybe not
Yeah,
that
so
silently, but walk us
great.
through.
Yeah, so usually what we'll do is we'll spend the first call, we call it our kickoff call, but we're pretty much kind of gathering information about your specific situation. Everyone's plan is different, but on the back end, we're creating a plan specific to you with the tax savings associated with each strategy. So what we'll do is we'll create your plan tailored to you. We'll show you the plan and show you the tax savings behind each one. And that's usually where, if you're Googling something online or ChatGPT or any of it, that's kind of where it stops. You get the plan itself or the strategy and it stops there. Where what we'll do is, now that we have your plan, we've picked the strategies that make the most sense. Now it's the implementation, which is the bulk of the work throughout the year. Not only am I going to give you the strategy, okay, this strategy works best, you're going to save X amount, but now how are we going to implement it to make sure that I can put it in your tax return at the end of the year? If you need to have material participation, what does that look like? If you need to have a contract in place for the Augusta Rule, what does that look like? We pretty much do all the hand-holding for you. Our business owners, they're busy. W-2 employees, they're just as busy. But the idea is you can Google a lot of these strategies, or not if you're W-2, but then at the same time, we're going to help you implement it and make sure that it's done correctly.
Does anybody even Google anything anymore? Or
I
is Google
know.
out and Claude and ChatGPT and whatever other
Right.
AIs are popping up? Yeah, and one thing I wanted to jump in on, because, we get clients that are really intrigued, but really nervous because this is a whole new universe for them. And I always reference back to my kind of how I got started in this, because I was new in San Diego, young, in the early 90s. And I was doing some accounting work for a Fortune 500 company. I was unlicensed. I hadn't gone to school yet. And some friends referred me to their accountant. And he, 1 year after doing my first return, the only return I did with him, he went to jail for tax fraud. And that's what actually got me to go to school to start to look at this, because I knew there was a right way and I knew there was a wrong way. Clearly, his way was wrong, which was literally making stuff up. Our way was a lot better, that we developed our process because we really take a lot of care, because we're both far too pretty for prison. And I don't think either one of us would do well. And 30 plus years later, we're not in jail. But really, so a lot of like the process you described is accurate. We're going through, and we operate from a universe of over 1,500 strategies. And no one client gets 1,500 strategies. A real estate investor is going to work from a universe of one set of strategies. A business owner is going to work from another universe. A W-2 employee is going to work from a smaller universe. But at the end of the day, these are all legal strategies that can be implemented, and 2 or 3 or 4 of them combined in a year creates a massive overhaul on their taxes. And we've had clients go from one last year. And if you're paying hundreds of thousands a year, this may not sound like a big deal to you, but this was a game changer. Amazon employee making $73,000, paid $73,000 in 2024 in taxes. Her 2025 return went down to less than $6,000 legally. And most importantly, we've got all the documentation. So if the IRS were to ask, we've got everything ready to go to show that she complied with every section of the code that was required. And we do that for every client so that we are in a position to hope that the audit doesn't happen. And the math supports that, because only a handful of returns out of every 1,000 do get audited. But if it does happen, which I call winning the reverse lottery, then we've got all our documentation ready to go, because often it won't happen for a year or 2 or 3. And we had a potential client send me something from his old account, like, oh, that's a hope and pray you don't get an audited strategy. And I took great offense at that. I tried to be diplomatic, didn't really work because we haven't heard from him since. But as nicely as I could, I'm like, that is absolutely not our strategy. It is document, document, document everything. The code section, any requirement that the IRS is going to look for, have that ready to go, pre-audit every single file. What's a client that you can think of that we made a huge difference on? Perhaps a business owner. I know we've been looking at a couple files just recently where we're finishing up the return for what we did last year. Why don't you give them a quick example?
Yeah, I mean, just alone on switching a client entity structure is a huge problem in having the right entity for your business. So just switching it from a single member LLC to an S corporation saved a ton of money on the self-employment tax. And I would say on average, just that alone can save 20 to 30,000 just on what you were paying initially.
Yeah.
Like
And I
Mark.
know one client that we both were looking at had a almost $250,000 in savings based on one chess move that we did last year. $250,000 that you are currently giving to the IRS, or even $60,000, like our last client, the Amazon employee that just wants to retire, just wants to be done and travel and drink good wine and make some bad decisions, hopefully not jail decisions, but just to have a good time. 60,000 compounded, or $250,000 over 5 or 10 years that would have gone to the government, that is back in your pocket, can be an absolute game changer. So yeah, I mean, really, a lot of what we do, again, back to the scorekeeper, our model is a coaching model, and that is why we charge usually substantially more than what someone's current tax professional is. But at the end of the day, our services we view as an investment with a measurable return on investment, and we're not shy about sharing those numbers with you, not only because we want you to realize, hey, you might have been paying less to the tax professional before, but you were paying a lot more to the IRS, so even though they were cheaper, you were still paying more. Pay us a little more, or maybe a lot more, but we bring down that bill and you come out ahead in that. Steph, what are the questions that you get from new clients when they're just like, this sounds good, but what are some of the things that you run into? I know I run into a bunch of things, but what are you seeing out there?
Yeah. One of them is, how do I know I will be able to get X amount of savings? We don't give you a dollar amount right off the bat, but they want to know that the investment that they put in, that it's worth, I guess, like they're going to get enough savings associated with that.
Yeah, and I know one way we address that is we do have a 3x guarantee. Like whatever you pay us, you're going to save 3x. And frankly, we kind of don't want you if we're not going to do that for you, because we're hoping that not just you will be a raving fan of ours, but that you will feel compelled to tell your friends that we are literally the greatest thing since the invention of sliced bread, air conditioning, the wheel, villain, whatever thing you love, ice cream. I don't know. So we do an analysis. We obviously can't generally give you an exact dollar amount, but we can get pretty close. I'll tell you one that I see is, yeah, but I'm a W-2 employee. Like my guy just tells me, or my gal just tells me there's nothing I can do. And I would say, maybe you can agree with this, I'd say about half of our clients are W-2 employees. And generally we fit best if you're single and making over 200,000 a year, or married making over 300,000 a year. And I was just reviewing one client the other day. They are New York based, so wages tend to be higher there, and the couple are highly trained professionals, but both working W-2 jobs. Their tax bill has been over 300,000 just federally several years in a row, and it will be down to around 50,000 for this year. So again, there's that $250,000 of savings. What else do you get asked, Stephanie?
Well, they come right away like, I don't want to do oil and gas. Tell me something that's not a short-term rental. So
Oil
they're
and gas is
asking me
popular, girl. It's
already
over $100 a barrel.
Yeah. And so I tell them those are some strategies that you might see on our report, but they're not the only strategies. Like we've mentioned previously, we're part of a couple different peer review groups. So those are going to be on there because they are strategies and they work for some people. But if you don't want them, we have plenty of strategies that can do similar, if not better, depending.
And Define the problem with oil and gas versus, say, some of our top elite 5-star strategies. What is the difference? Putting you on the spot. You better know the answer to this, Stephanie, or I'm going to be very, very sad.
Should I just pack up my bag now?
Yeah,
It's
go.
the
Guys, thank you. Stephanie's gonna go.
actually I gotta go. No,
Yeah.
so some of our strategies, it's the leverage. Is that the right
Boom.
term?
That's the word. You can
Do
stay.
my job. I
Unpack
get to
your
do
bags.
my job, guys.
You're good. And from a tax perspective, what does leverage mean?
Yeah, so what it means is we have some strategies like oil and gas is usually zero point 0.9 to 1. So for every dollar you pay, you get 90% as a deduction of that dollar. So 90 cents on the dollar.
Right.
Versus we have some strategies that can go 11.4 to 1 or 4.8 to 1, meaning for every dollar you give, you get back $11.80 or something like that.
And let me correct you. It's not that you get
Or
back
sorry,
$11. You get the deduction equivalent of $11,
equivalent
which
of $11.
usually means that you put a dollar out and you save $3 or $4 on your actual return. So just wanted to correct that. You're doing great. You don't have to pack up. Carry on.
All right. Yeah. So that's, I think, the main difference with the oil and gas. But like I mentioned, they usually come and say, like, I don't want to do this. I don't want to do this. I don't want to buy a short-term rental, which is
Yeah,
great.
short-term rentals.
But just so
Like
you
people
guys
love that
know,
or hate that,
it's
and they're
one
like,
of
"You're
many,
talking to me
and
about
we'll
short-term
tailor
rentals."
it specific to you.
Yeah, and by the way, any of you guys that hate short-term rentals or long-term rentals or any sort of rentals, I count myself among you. And by the way, as of the time we're recording this, if anybody would like a lovely condo up in the Cambria area, Central California, it's the condo itself is not actually lovely. In fact, it's kind of well, dung heap is so judgmental,
You better
but
hope
it's
your wife's not watching this video, Ron.
yeah, she blocked me. It's
You
awesome.
worked hard on
I can
this.
get away with it. But if you guys know her, don't you dare tell her. I will be in big trouble. But yeah, dung heap is probably not the accurate description. If you guys know Cambria, Cambria is this tiny little town up by Hearst Castle. It's got all these gorgeous oceanfront, properties. My house is on the back side of town where like the people that actually work, it's like in a little 16-unit complex and stuff. And anyway, yeah, it's a pain to get fixed every time something goes wrong. It's a pain. So I don't personally love that. Some people do. And if you do, bless your heart, you are welcome here because we work with a lot of you and your friends. But it does involve some extra work that we have other strategies that are also leveraged where you don't have near as much of the hands-on outside of maybe a material participation requirement that the government has put in place that when we help you implement, we make sure that you comply with because that's what's going to get us in trouble. And us means all of us, and we're not getting in trouble. We don't want you getting in trouble or losing a deduction. So we're going to work on that. Carry on.
And I was even going to say sometimes there's strategies that we'll mention that you've already heard of. And the good thing about us and our network is we vet a lot of different people as well for the same strategy. So we can give you the pros and cons. And we like to think we do our homework in terms of like every strategy that we present to you.
We do a lot of homework,
A lot of homework.
overkill. Yeah, we had some lady the other day, and she meant it well. She's like, "Well, I'm a CPA. I can't lose my license for strategy we're working." We're like, "Girl, do you think this is like?" I was a lifeguard when I was a teenager, LA County. I'm a little pudgy and slow to be doing that again. And I don't know that I know how to tend bar, and that's like it. So we are just as concerned about this as you might be watching this. And so we want to make sure we're operating within the code. And I've said this before, the tax code, however many thousands of pages, we hear numbers anywhere between 77,000, but I believe that's really outdated, up to around 129,000. And like Stephanie said, it changes every week. An interpretation or a rules modified or something, even that's separate from the major changes like the OB3, or you might notice the one big beautiful bill. And God, now what was I even saying about that? Oh,
No.
the code is a whole series of carrot and sticks. So right now, for instance, this administration, the Trump administration, is really gotten rid of, say, some of the incentives for electric vehicles because they've hit critical mass. People will buy, unlike 20 years ago when they started the EV credit, people are going to buy a Tesla or a Rivian or Lucid or something like that, whether they get a credit or not, right? Because they've hit mainstream. Solar panels, pretty much everybody that wanted solar for their house has put it over the last 15 or 20 years, and most new construction includes it. So they got rid of some of those, but now they're really emphasizing energy storage and giving people, including W-2s, a very strong incentive for investing in these projects and providing some of the capital. And these projects are cool because some of the capital that you can provide for this, if not most of it, comes from taxes that you've already paid. And the reward that you get is a big depreciation deduction. And yes, it can go against W-2 income or business income. And whatever you don't use in 1 year rolls forward potentially forever. But even among those projects, Stephanie, I mean, I don't know about how many you've looked separate from me, but I've vetted at least 10 of them. And even among those, they all meet the bare minimum of the code, so they'll work. But some are definitely better. Some are 5-to-1 leverage. Some are 7-to-1 leverage. Some are 11-to-1. And we're currently vetting one that's closer to 18-to-1. Probably won't be online until 2027, but it's fun and exciting. We learn about new technologies and all kinds of things. So even if you've read or like, I looked at that and I just didn't like it or it didn't work, realize that even under one thing, short-term rental, energy, oil and gas, there's some products are, some of these partners are 3-star partners on a scale of 1 to 5. Some are 4, some are 4.7, some are 4.8. I don't know that anybody's ever a 5 because there's always a catch to it. But just like if you're picking on Netflix or Amazon for something to do or a restaurant, we only want to deal with 4.5-star strategies or better. Is that fair to say?
That's fair.
What else do you see? I could literally keep you here locked in my presence forever chatting about this because we love this stuff. But what else do you get as questions that people or concerns that people might have? We addressed the audit portion. We addressed, is this going to work for me? And look, you guys are welcome to reach out and book a time with someone on our team. We'll chat about your situation and walk through this with you and let you know, yeah, you're a great fit. We can save you, roughly this range. This is what it'll cost you. This is what our process looks like. But do you come across any other questions that we really haven't addressed yet?
I think those are the main ones, but I would say when they are questioning, will this work for me? Like you mentioned, we work with 50% of our clients are high income W-2. The other 50% are business owners. So obviously your specific situation is going to be different, but everyone's if you're hiring W-2, we know this has worked for how many of our clients, and this has worked for a lot of our business clients. So there is going to be something. I think that's the catch-all. Is this too good to be true? Is there going to be something for me? And based on how many W-2 clients we work with, how many business owners we work with, there is going to be something that works for your situation.
Yeah. And you're special, but you're not that special because we see
Okay, Rob.
it's math. It comes down to math. Yeah. Special in your own little way. You're a beautiful snowflake. But really, if you're W-2 single making over 200,000, married making over 300,000, or you're a business owner that's grossing over 500,000 or on track to get there, within the next year or two, you are probably a very good fit for what we do. And almost without meeting you, if you guys are, anybody watching this is old enough, Stephanie, you're going to have no idea what I'm talking about. But do you at least know who Johnny Carson was?
The name sounds familiar.
Okay, so anyway, Johnny Carson was the greatest talk show host of all time, and I will straight up fight anyone who says otherwise. It's not Jimmy Kimmel, it's not anybody else that's out there. Jay Leno was great, David Letterman was great, but Johnny Carson was the guy before those guys. And I think he went off air in the early 90s. By the way, fun fact, his last actual guest was Bonnie, I don't know if you say it Riot or Riot, but anyway, Bonnie Riot, we'll call her, and she's saying, I can't make you love me. It was her. It was beautiful. And then his last show was just him reminiscing. But he was he was hilarious. And he wasn't political. He just stayed out of it. He just made people laugh. And he used to, Stephanie, have this great bit where he would dress up in a turban. He'd probably get canceled for doing that now, but it was Karnak the Magnificent. And he would hold an envelope up to his head that was sealed, and he'd give the answer, and then he'd open it and read the question. And it was funny. If you guys have a moment, go look up an old YouTube of Johnny Carson doing Karnak the Magnificent. It was funny. But we almost can tell you without looking at the return. And look, if it makes you feel better and you want us to look at the return, we'll absolutely do that. But if you fit those criterias, we believe that we are absolutely the right firm for you. If you're cool and fun to work with, and if you're married, happily married and friendly, and just really want to make a difference and want to stop giving all of your money to the government, God knows they will take all of it if they could. And really, if you want to blow your money on fast cars and vacations, awesome. Still, it's better than going to the government. And if you want to support charities, you pick those charities, not the government picking for you. But if you want to use this to also build wealth and accelerate your own financial independence, if you're giving 25 or 30 or more than 50% to the government, and yes, I know the code doesn't actually go that high, but if you live in a high tax state like California, New York, New Jersey, Illinois, one of the high tax states, and when you really look in there at the way they take certain credits away from you the more you make, and they hit you with things like net investment income tax and additional Medicare tax and all that stuff, a lot of our clients are paying close to 55 or 60% at the real end of the day. And that doesn't even count like sales tax and property tax and all that stuff. Like our taxation has gotten completely out of control. But if we may not bring back every dollar of that, but literally go look, when you're doing this right now, go look at line 22 of your most recent 1040. That's the number of real tax that you pay that we can directly affect. And if you're self-employed, probably the line underneath it as well, line 23. And if you're like, this number sucks, I need to do something about it, you need to talk to us. You need to get serious about this. And great, if you want to research it yourself, but understand it's a complicated code and we're here to help you navigate that. And every year the rules change. So if you engage with us, it's like crack. Hopefully you're hooked, and you're not hooked on crack. Crack is bad. Children don't do drugs. Drugs are bad. But the rules change every year, and we just will always find ways to do this. And if you're going to work 5 or 10 or 15 or 20 or 30 or 35 more years, getting a handle on this early will buy back years or even a decade or more of your life if we're just a little bit prudent with some of those savings. And we put even in our engagement that our goal is to get you at least $1 million tangible dollars more at retirement than you would have had without our services. But for many clients, it's 5 or 10 million. Real math. And I think one last thing that's kind of fun, because we're in this season right now, Stephanie, is we are taking a lot of our W-2 clients and we're going in and turning off their withdrawals, their withholding for the rest of the year, because we know they've already paid in enough and they're going to get what they've already paid back. So there's no need to give the government an interest-free loan for anymore. So like that is fun when clients are like, I just got 2,500, 3,500 in one client's case that I was working on at 11 o'clock last night, 7,500 a paycheck. They're withholding for the Fed. She gets paid twice a month. That's $15,000. And we're recording this. We got 4 months left to go. That's $60,000. God, I hope I did the math right. Yeah, $60,000. That she gets to pocket, and she's still going to get a refund, her and her husband. So, Steph, any parting words before we wrap this up? Oh, and I'm late for a phone call, so I will have to go. Any last words for them? Call us. Have your people reach out to ours. You may get Stephanie or myself. It's just a scheduling thing. But even like our clients, we're getting a title for them, growth advisors. They're really good. They don't know all the details of the code necessarily like we do, but they know how to spot when we can definitely impact that. So hope you guys enjoyed this. In the comments, throw in any questions you guys have. We'll check them a couple times a week. And also like the video, please, and definitely subscribe, because we will be posting more content here on strategy so you can have a better idea of what specific things might be available to you. All right, Steph, thanks for joining me. I know you're not quite as used to the camera as I might be. You did great. And
Thank you so much.
Hope you guys enjoyed the video. Like, subscribe, call us.